Hi, my name is Scott Gibson with Beneath the Surface. I'm here with David Morgan of silverinvestor.com. Hi, David. Thanks for being with us.
Scott, great to be with you.
Good. I wanted to get your take on the economy right now. Where are we at and where are we headed?
Well, where we're at is in this back and forth, what I call indecision situation. The economy is weak globally. China, that was grinding away at about 8% a year, is not doing as well as it once was. I mean, I've been asked this question a couple times here at the show, but as an example, the real estate boom in China is crumbling. There's 64 million apartments that are unoccupied. They've overbuilt in a lot of areas, real estate being one of them. They also have a lot of pressure on them to keep their economy going. They're trying the same thing that the Northern American economies, especially the U.S., is trying, which is to stimulate the economy by low interest rates and pushing money into projects that may or may not have merit. So the whole globe has kind of caught the Keynesian disease and the idea that you can print your way out of a debt problem or borrow yourself out of a debt problem is preposterous, yet no one is coming up with any other solution. So as the euro continues to degrade, China continues to slow, the United States continues to degrade, you're going to see, I think, a weak economy from a physical level. And I want to talk about that for a moment. We always look at the financial side of things, and of course that's a reflection, but only a reflection of the physical economy. So if you really want to know what's going on, just look. Easier said than done. But what you got to look is at the strip malls. Are there more businesses that are coming into the new strip mall or the one that exists or leaving? In my area, there's all kinds of strip malls that maybe have facilities for like 8 small businesses and they're half full. There used to be 8, now they're 4. No one new's coming in. That's just a quick example, but that's a physical economy and that's what you really want to concentrate on. Sure, there's pockets of growth here and there, but the overall growth trend has been in one place, money supply. There hasn't been true underlying physical economic growth in quite some time. That's what you have to pay attention to.
And the effect that has on the metals, so obviously gold and silver. Right. So what's your take on that? Where do you think we are with gold and silver?
Well, the metals have been floundering since they both got overbought. I mean, I'm a big advocate for silver and gold, and yet all markets go up and down, including the metals markets. And when the market was going through 35 on the way up of April of last year, I was warning people very much that, you know, if you have to buy it, buy some, but don't buy it all. This is starting to go, this has been going parabolic. It'll probably continue. I don't know if I can call the top or not, but be careful. And I did call the top, if you're a trader. Within a couple days, I got out at 48 and change, which is the top. And yet, a lot of people probably bought too much, which they hadn't at 35, 40, 45, even at 30. I mean, silver, has been under 30 this year in the summer months. And so it's one of those things you have to take a long-term perspective on. Gold did the same thing, but not to the level, because silver is a smaller market, it's more volatile, the percentages are greater. But gold peaked at $1,900 in September, and it fell down in about the $1,500 range. That's still a pretty good markdown for even gold. So you have to be a little bit careful on these markets. If you're long-term and you bought it at $1,900, my suggestion, as long as it's non-leveraged, is to hold it. And if you want, add to your position on this pullback. But nonetheless, my long-term view has not changed. Until the underlying problems of the global financial system have been changed, you are really required, in my view, to own some position in physical gold and silver. That hasn't changed.
And what's your take on the outlook for gold and silver over the next, say, 12 months?
I think we got some overhead resistance to work through, but I think we're probably near a bottom in the summer, probably going to be bottoming in the summer months. But since I don't know, I think it's best to average in over the summer, fall kind of thing.
Right.
And I think over the next 6 months that they'll work higher. I think gold will probably be in $1,900. Well, yeah, in 6 months. I think gold will be back to the $1,800, $1,900 level, maybe higher. Silver probably in the $35 to $40 range, maybe higher. I really think that the metals have got a long, move to the upside, but there's a lot of arguments that the commodities cycles peaked, and that, you know, even there's arguments that gold and silver peaked. And, you know, until they haven't peaked, they have. I mean, that sounds ridiculous, but until 1900 is taken out on gold and 48 is taken out on silver, these markets have peaked.
Do you think that's going to happen in the next year? Is there a possibility there, or is it going to take longer?
Well, I'm conservative, as you know, Scott, and, you know, I get taken to task for it once in a while. These long parabolic moves that we experienced in silver, to, you know, basically from 19 to 48, or 26 to 48, depending how you chart it, and gold from roughly 1500 to 1900, they can take as long as a year and a half. But the whole system seems to be accelerating. I think it'd probably be worked off in a year's time or so. So I think, you know, and this is a guess, no one knows. We know after the fact. We've probably gone through enough consolidation here with what's going on. I think, you know, we've had a year consolidating in silver and September till present, so maybe 9 months in the gold market. I think we're pretty close to the end of it. Time will tell.
And what's your take on the stocks, specifically the junior stocks in the resource sector?
Stocks, I think, have bottomed. I mean, all my work shows that we're pretty close to a bottom, if not already bottomed. A lot of guys that do pretty good technical work say there's one more leg down. It's possible. I don't see it. I did a video update for my members only. I said, look, I do see a possible sell-off in the general equity market, and I do see the mining shares sympathizing with a big sell-off. But my take is all they would do is, go down to the recent low. So let's say, for an example, make it very clear that if the stock market was to go down 10%, you might see the mining shares fall off 3 to 5%, but they wouldn't fall off the same magnitude that the general equity market does. They're so low and so underpriced relative to bullion. The mining shares are a 31-year low. So we haven't had this opportunity for a generation and a half to buy stocks this cheap to what the bullion price is right now. Yeah. So I like that market a great deal. I'm buying. I'm not afraid of bottoms. Can I pick an exact bottom? Maybe, maybe not. But it's cheap enough where you really have to wake up and start to purchase it.
Yeah, I'm doing the same thing. I totally agree. Thanks very much, David, for being with us.
My pleasure. Thank you, Scott.
Again, that's David Morgan of silverinvestor.com. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.